Good morning, this is Beating Wall Street. Yesterday, the S&P 500 rose 2.6%, to be more precise, 2.59%, which is really good, one of the best days in quite a long time. Today, the futures are up 1.4%, which tell us that the bull case scenario is totally in. The markets, I think that the market are discounting, as we told yesterday, dovish or not too much too hawkish attitude for the central banks. This is as an objective data. This is not my opinion. We have seen this morning the Australian Central Bank pivot. What we told yesterday, the central bank must pivot. We see the first one. Australian Central Bank supposed to raise the interest rate 0.5%, but they did the half. They did 0.25%, which is really good news for the market, for the economy in general. The Australian dollar logically came down compared to the dollar, as the market was expecting a high rate. But this is very important because now we have seen the first central bank pivot. Um, they fight against the consensus. They raise less. The other central banks must do the same. When they did when they did that, this is gonna be a really good environment for the stock in general, because the market are discounting a really hawkish tone by the majority of central bank. Um, we hope that the Fed needs to be the first one in make this pivot or this dovish move, because the other one is going to follow the lead. And also we need this pivot by the Fed in order to finish the strength of the dollar, which is quite bad for the emerging markets and the rest of the economy in general. Um, Jeremy Powell must do it in order not to pass to the history books one of the worst central bank in history. Because of the strength of the dollar, he can cause a global financial crisis, which is quite unlikely if they move quickly and they pivot. A lot of voice in the market says that the central bank are not going to pivot because they will lose credibility. They don't have credibility right now for the majority of the market, so this is not a problem. Um, Several voices in the market, as I said, ask not to pivot just in order to not lose credibility. But this can give credibility to the Fed in order to recognize the actual situation in the global economy, back down and pivot. This gonna be the right move and intelligent move, and I hope that the Federal Reserve made that statement, turn dovish. Well, and another great point is Credit Suisse. Credit Suisse is the second symptom of the tightening in the monetary policy. The first one was in UK. We see the government debt in UK almost no. There was a crisis, and the government and the Bank of England had to intervene in order to prevent the crisis in the financial crisis in the UK. Now we have Credit Suisse. Well, Credit Suisse, the credit default swaps implies a 20% of probability of default to Credit Suisse. As we said yesterday, Credit Suisse has been in a bad shape for quite a long time. This is not new. Um, This is a Lehman moment. Well, the CDS implies a 20% of probability of default. Um, I think that they're going to raise capital. They has as they have done in several times, in the past. Just to give a data, the shares in circulation for Credit Suisse has risen about double, no, for 1 billion US billion to 2.3 billion from 2013 from today. So this is not new. The shareholders are going to pay the price. I think that they're going to raise capital. um, I don't know. It's quite difficult to say if they are not going to default, but the probability of default is 20% given by the credit default swaps. So this is the data we have. We have to think in that manner. Well, the central bank has been quite dovish for a decade, so the banks were in good shape for a really good environment, really accommodative policy, so no problem at all. But now, as the investment policy of Credit Suisse is a little bit risky, we saw in Archegos, the default in Archegos, the Credit Suisse giving a lot of credit. Now we start to see the problem is coming up, because of the tightening of the monetary policy on the difficult, the tough environment. So we hope that this is not and I think that this is not a lemon moment. We will continue with the bull case. For how long? Well, this is a good point, and it's difficult to say. We now with the future we have a 4% rise in the S&P 500 in 2 days, which is brilliant. But we need the central bank statement about change the view of the monetary policy. We must see cuts in rates in 2023 in order to materialize this probability that the market are discounting. No? It could be a really huge impact on the market if the Fed continues with their mistake and they want to raise rates really aggressively in order to beat the inflation. This could not be a surprise for us because the Federal Reserve was wrong just in the first, yeah, in the late 2021, and I hope that this could not be the second mistake of the Fed, stormily going to hiking rates no matter what. No matter what, we saw the data in the economy of the United States, really bad data with the PMI and the ESM indicating recession period, below 250. So this is a really good indicator that the economy is slowed down. Also, as the mortgage rate in the United States is quite high, the real estate market is going down. So really warning signal out there that the economy is going down. And most importantly, the IPC expectation is below or close to 2% in the long term. I think that in 2024 or 2025 the core IPC number expectation, the inflation expectation is 2%, which is the target of the Federal Reserve. So taking all this data in account, there is no need to punish the economies further. So I hope that the Federal Reserve change his statement, turn quite dovish, pivot. The people in the market said that this is illusional, but the market are discounting that. So we stay with the bull case scenario, long in equities, even long in bonds, because we see the long term 10 years the government debt of United States peak in 4%. This is gonna be the peak. uh, quite more, a little bit more, a little bit less, 4%, but the interest rate has fall quite a bit. So long in equities, long in bonds. I'm hoping that the Federal Reserve don't make the second big mistake. Thank you so much.